Hello students, myself is Parminder Singh from Prab Kripa classes. Our today's topic is a comprehensive dive into the world of fiat money. After going through this course, the students will understand the meaning of fiat money. Every one of us is having some physical banknotes or the coins in our pockets, which we give to the shopkeeper to purchase something. These banknotes and the coins have been issued by the government and they have been declared to be the legal tender for any form of transactions within the jurisdiction of the country. The students will also understand the difference between fiat money and commodity money. Fiat money is the money in the form of banknotes, coins, or digital form of money, whereas commodity money is the money which has its intrinsic value, that is the gold coins or silver coins. Then the students will also understand various forms of fiat money. The students will understand who backs the fiat money. The students will understand whether fiat money is a legal tender. If a person refuses to accept the fiat money, what will happen? Can a person refuse to accept the fiat money? Then the students will understand whether fiat money encompasses both banknotes and coins. The students will be able to understand those factors which influence the value of fiat money. Then we will understand the authorized entity in a country who is responsible for creating fiat money. Then we will analyze the effects of the central bank purchasing financial assets like government bonds, whether the central bank can influence the money supply in the economy. If yes, how they can do so. Then we will evaluate whether fiat money possesses intrinsic value. Now the topic before us is fiat money, meaning and characteristics. First of all, we must understand the meaning of fiat. Fiat means let it be done. If we look at the history, there were kings who were the ruler of the particular territory or the country or the state. They used to give the orders that something should be done. So in the same way, fiat means let it be done. Fiat also means an official order issued without the consultation of those expected to obey it. So now we have understood the meaning of fiat. First is let it be done, and the second is an official order issued without the consultation of those who expected to obey it. Now we will come to the fiat money. Fiat money is the currency or the money whose value is solely based on the government's order. Government says that if it is if a particular piece of banknote is worth $1, then it is $1. If it says that it is $10, then it is $10. If Indian government says that the particular banknote is worth rupees 100, it is 100. The value of the currency is based on the government decree or the fiat. Fiat means official order. Order of the government that it is worth a certain amount. Government of the country says that the particular banknote is worth a particular amount. Fiat money is a form of currency that does not have intrinsic value. If we have any of these currency notes with us, whether they have any intrinsic value? No. They have the value because of the orders issued by the government of the country. That is, it is worth a particular amount. On the other hand, if we are having, say, gold coin or silver coin, they have their intrinsic value because they are made up of a very precious metal. It may be gold or silver. It is only made up of a piece of paper with some ink printing on it or some security features. Then why do the people accept the same for transactions? It is accepted for all transactions and debts within the government's jurisdiction because it is issued by the government. Government has declared it to be the legal tender that it must be accepted for the transactions within the territory of the country. Most of the world's currencies such as US dollar, euro, Japanese yen, Indian rupee, Pakistani rupee are fiat money because they have been issued and declared to be the legal tender by the government within the jurisdiction of that country. We have talked that fiat money is declared by the government as legal tender. What is the meaning of legal tender? Legal tender means that it must be accepted as payment for goods and services. This is also the example of fiat money in India. These are the currency notes which are have been issued by the government. But one point is to be noted that here you can see that this is the security feature. Here this is not appearing. So this is the fake currency. Fake currency is also there in the market because criminal minded people do not lay behind in any field. Let it be the production of any spurious materials, spurious goods, or anything. So, when the government of the country or the central bank prints any fiat currency, it also incorporates various security features in it. It may differ from country to country and from currency note to currency note. Without legal tender, they are nothing but piece of paper. Suppose at present, this is the fiat currency, 500 banknote is a legal tender as on November 2023. It is a legal tender. But if in next month or at any time the government of India decides that we are withdrawing 500 rupee note from the market and they will not remain legal tender any longer after a prescribed period of time, they will not remain legal tender. What will happen? the value of these currency notes will become zero. So without legal tender, fiat, any currency is nothing but piece of paper. Currency notes are having value in the market only because of the fiat or the government order issued by the government of the country. Central banks can adjust the supply of fiat money to manage the economic conditions such as inflation and deflation. Fiat money is lighter and more convenient form of currency than commodity backed currency. Then it has the problem of counterfeiting. It means that some people may produce fake currencies such as this one. It is hard to transport large amount because of their bulk. Suppose we want to purchase something, whether if the price of the same article is say $1 million, whether it is easy for a normal person to carry $1 million, there are the chances of theft also. The bag may be snatched, or the if we are having say denomination of $1 each, so 1 million banknotes will be there in the bag or gunny bag. So it will become a very difficult for us to transport fiat money from one place to another if it is in the form of currency notes. If we want to transfer money from one place to another, we can take the option of e-money, internet banking. It is next is inflation results when the government issues too much fiat money. Suppose at present $1 billion is in circulation in the market and there is supply of say 1000 things of a particular commodity in the market. Suppose the government of the country prints lot of fiat money and the supply of fiat money increases to $1.5 billion. So earlier the goods were 1000. Now the things quantity of the goods is the same 1000 things, but the supply of money or the money in circulation is 1.5 billion. That is, it has multiplied by 1.5 times. That is, money in circulation has increased by half, but the things are same. What will happen? There will be inflation. The prices of the things will increase. Fiat money is the dominant form of currency worldwide. In most of the transactions, we are using currency notes or the coins for everyday purchase or large scale economic activities. The topic before us is the components of fiat money, banknotes, and oblique or coins. Whenever we go to the market to purchase something, we pick from our pocket some physical currency notes and or some coins. Now the question before us is whether banknotes and coins or banknotes or coins are the components of fiat money. We often associate fiat money with paper currency. Paper currency means notes, physical currency notes. But fiat money includes both paper currency, that is banknotes, and coins. It means that though we commonly use fiat money with reference to paper currency, that is banknotes, but fiat money includes both banknotes as well as metallic coins which may be used in our country. The term fiat money refers to any currency that is issued by a government and declared to be legal tender for transactions within its jurisdiction. What is fiat money? It is the currency, that is, it is the physical banknotes and coins which are issued by the government or the central bank of the country and which have been declared to be legal tender. Legal tender means that the government has ordered that these physical coins, that these metallic coins or these physical currency notes must be accepted for all the transactions. That is, if we are to purchase something, certain goods from someone, or we want to purchase to avail the services of some person, then we can use that metallic coins or the physical currency notes which have been issued by the government as a medium of exchange within the jurisdiction of that country. Fiat money can take the form of physical banknotes and coins, but it must also be remembered that fiat money also includes digital or electronic forms in modern banking systems. Paper currency. Paper currency is normally issued by the central bank of the country, and paper currency is the common representation of fiat money. Metallic coins, which are generally minted by a government treasury or mint, also fall under the category of fiat money. That is, the coins which are issued by the government also fall within the category of fiat money. In addition to these physical currency notes and coins, fiat money also exists in digital form in the banking system, where majority of the transactions are conducted electronically. When in these days we are making use of electronic banking, our money exists in the form of digital form in the banking system. So whether it is the coins which are lying in our pocket or the banknotes which are lying in our pocket or our wallet, or the digital entries which are lying in your bank account, if it is issued by a government and accepted as a legal tender, it is considered a fiat money. Now the topic before us is the authority behind fiat money creation. We have already learned that fiat money means the paper currency or physical banknotes or the coins which are issued by the government and declared to be the legal tender for all the transactions within a country. It means that the physical currency notes or the coins which have been issued by the government and the government has ordered that these coins and the currency notes must be accepted by all the persons of that country for transactions between themselves, and no person can refuse to accept the fiat money as a means of transactions. So now we will understand that Now we have understood that fiat money is issued by the central government or the government of the country. So fiat money is created by the government or a central authority that has the power to issue currency. It is not that the government can authorize private individuals to print the currency. If that is the scenario, the private parties will go on printing currency, and the there will be a flood of fake currencies in the market. So the government have retained the power with itself to issue the fiat money, or the government has authorized the central bank of the country to issue the fiat currency. That is either government of the country or the central bank of the country issues or creates the fiat money. In most countries, the central bank has the authority to issue currency. There are many examples of central banks. In US, Federal Reserve is the central bank. If we talk about India, Reserve Bank of India is the central bank. If we talk about United Kingdom, Bank of England is the central bank there. And the central banks have the authority to print or create digital currency in the form of bank reserves. The process typically involves the central bank purchasing financial assets such as government bonds from the open market. It means that either the central bank or the government can print the currency notes. The other option is to create fiat money in the form of digital form. And for the digital form, the process involves the central bank purchasing financial assets. That is, the central bank purchases the government securities from the open market. Open market means from the banks or the individuals or the institutions who hold the government securities. And in return for that government securities, the central bank makes payment to them in the form of bank reserves. That is, the payment goes to the is deposited in the accounts of the holders of the government securities. The payment is made to them, and all the payment goes into the bank accounts. So in this way, fiat money is created in the form of digital form. When the central bank buys these assets means government securities, it credits the reserve accounts of the banks with the corresponding amount of money. That is, if the central bank purchases the government securities, say for 1000 crores, the appropriate amount is credited to the reserve accounts of the banks, effectively increasing the money supply. When the credit is given by the central bank to the concerned accounts maintained in the banks, in this way the money supply is increased. This new money in the form of bank reserves then circulates in the economy through the banking system. When the central bank has made the payment in respect of the government securities it has bought, the money supply in the market increases. The central bank can influence the money supply through various monetary policy tools. The central bank in any country has its own objectives. It has to control inflation. It has to see that there is economic development in the country. There are many other objectives of the central bank's monetary policy. So the central bank tries to achieve its objectives through open market operations, reserve requirements, and interest rate policies. That is, it can carry out open market operations, it can increase or decrease reserve requirements. As already told in one of our earlier courses, when a person deposits, say, 1000 rupees in the bank, the banks do not keep all the money with themselves. They give that amount on to some other persons. But one thing is to be noted, that the banks cannot give all the amount which it has obtained from the depositor as loan. The commercial bank has to keep some portion of the original deposit as reserves, as mandated by the central bank. Only after that the commercial bank can give out the loan. This is the reserve requirement which is set by the central bank. We can say that the reserve requirement is 10%. Then this commercial bank can give only if the deposit is, say, rupees 100, then the reserve requirement is 10%, then the commercial bank can give only 90 rupees as loan. But if the requirement decreases, say the central bank has decreased the reserve requirement from 10 to 5%, then the banks can naturally lend rupees 95 to the 95 as loan, keeping rupees 5 as reserves. So by changing the reserve requirements, the central bank can affect the money supply in the market. The central bank can also change the interest rate policies. Interest rate policies means when the commercial banks are in need of some funds, they can also approach the central bank of the country. The central bank also charges interest from the commercial banks for the funds they may be giving to the commercial banks. So by changing that interest rate which the central bank charges from the commercial bank, the central bank can influence the money supply. For example, if we say that the interest rate which is being charged by the central bank from commercial bank, then say 1000 crore is demanded by the commercial bank. Suppose the interest rate is increased to 7% by the central bank, that it will charge 7% from the commercial bank if they approach for funds. Naturally, the demand may decrease to, say, from 1000 crore to 8000 crore. So the money supply will decrease in the market, because when the banks will have less funds with them, there will be naturally decrease in the money supply in the market. Now the topic before us is unveiling the differences between fiat money and commodity money. We might be having some currency notes or coins in our pocket. When we go to the market to purchase something, we give the same to the shopkeeper, and in return we purchase something. Why the shopkeeper exchanges the goods and services against the currency notes or the coins which we are having? This is because the currency notes which we are having or the coins which we are using are issued by the government of the country, and these currency notes or the bank notes and the coins have been issued by the government of the country, and the government of the country has given the fiat. Fiat means order, has given the order that these bank notes and coins must be accepted for all transactions. So the currency banknotes and the coins issued by the government and declared to be the legal tender for all the transactions are fiat money. Suppose we go to a jeweler and we take from him a gold coin or a silver coin of say 10 gram. It is not having any type of printing or branding on it. It is simply a gold coin and its weight is 10 gram, or a silver coin, its weight is also 10 gram. So what is that? This is the commodity money. Gold coin or the silver coin which is not issued by the government, but it has its intrinsic value because that coin is made up of some precious metal. It has its some intrinsic value. It is made up of a commodity, that is a precious metal. It is a commodity money. So now we will understand in detail the difference between fiat money and commodity money. First, fiat money. First point of difference is intrinsic value. If we are having say banknotes in our pocket, whether they have any intrinsic value? No, they do not have any intrinsic value. They have the value. Why they have value? Then why the currency notes or coins which we are having with us have value? Because these are backed by the government of the country. On the other hand, commodity money has intrinsic value because it is made up of some valuable commodity such as gold, silver, or other precious metals. The other point of difference is backed by. Fiat money is issued or backed by a government or a central authority, and is and its acceptance as legal tender is mandated by the government. That is, the government has given the order that these currency notes or coins must be accepted as legal tender for all the transactions. That is, you cannot, if you are the resident in a particular country, you must accept the banknotes or the coins which have been issued by the government as a medium of transaction, as a medium of exchange. You cannot refuse to accept the same in exchange of services or goods. On the other hand, commodity money is backed by the inherent value of the material from which it is made. That is, if the gold coin is made up of gold, then it is backed by the value of the material. That is the value of the gold or value of the silver or any other precious metal of which that commodity money is made up of. Next point is flexibility. The supply of fiat money can be easily adjusted by the central bank to meet the changing needs of the economy. Central bank prints the currency notes, or it can also adopt many other mechanisms to control the supply of fiat money in the economy. On the other hand, the supply of commodity money is constrained by the availability of underlying commodity. Suppose if in a particular country gold or silver is in scarcity, then naturally the supply of the commodity money in that particular country will be less. The changes in the supply of commodity can be slow and unpredictable. Next point is production cost. Production cost of fiat money is relatively low. Suppose the central bank wants to print the currency notes. What it requires? It requires only the piece of paper or the inks or some other security features which will be incorporated in the currency notes. So the production cost is relatively low in the case of fiat money. It generally involves the cost of printing or creating digital currency. On the other hand, commodity money generally has a higher production cost because in case of gold, the gold is not lying on the surface everywhere. You will have to extract it because the gold is lying below the earth in different forms, and a long process has to be carried out before we can bring the precious metals to its form in which they can be used as commodity money, because these metals come into the picture only after mining, refining, and minting the precious metal. Next point is examples. The examples of fiat money are US dollars, euro, British pound, Indian rupee, Pakistani rupee, and the examples of commodity money are gold and silver coins used in the historical monetary systems. Gold and silver coins were used in the past. Now they are not used in the current economies. Now the topic before us is understanding the dynamics factors influencing the value of fiat money. As already told, fiat money refers to the currency which is issued by the government and declared to be the legal tender for all the transactions within the country. Now the question is whether the fiat money, that is the physical currency notes or the coins which have been issued by the government, can lose its value. The answer is yes. Fiat money can lose its value. Why? This is because fiat money is not backed by any physical commodity such as gold or silver. There are a number of factors that influence the value of fiat money, and because of these factors, the fiat money can lose its value. Now we will understand those factors which influence the value of fiat money or because of which the fiat money can lose its value. First is inflation. If inflation is too high, it can erode the purchasing power of fiat money. Suppose cost of one fan is equal to $1. Suppose at present the cost of one fan, table fan, is equal to $1 in the market. Suppose there is inflation in the market, prices of everything is increasing, and say after 6 months the prices of one fan have increased to $1.2 because of inflation in the market. So what has happened? The purchasing power of fiat money has decreased. A particular good which was available for $1 earlier is now available for $1.2. So due to inflation, the value of fiat money has decreased, or the fiat money has lost its purchasing power, or the purchasing power of fiat money has decreased. In all the economies there is somewhat inflation going on. The prices of goods or services are increasing day by day. So the fiat money is naturally losing its value day by day. In some economies, the inflation may be more, and in other countries, the inflation may be less. Next point is economic stability. The overall economic stability of a country influences the value of its fiat currency. If we look at the history, for about 20 years, from 1947 to say 1965, the value of Pakistani rupee was more as compared to Indian rupee because of many reasons. With the passage of time, the Pakistani government depreciated the value of its currency because of some other reasons. A stage came about 20 years ago when Pakistani rupee and Indian rupee were of equal value. Now at present, what is the position? $1 is equal to 83.34 Indian rupee, and it is equal to 235 Pakistani rupee. You will see that when it was 1947 to 1965, the value of Pakistani rupee was more than the Indian rupee. And now, with the passage of time, Indian rupee is 3 times stronger than the Pakistani rupee. That is due to various reasons, including the economic stability. The value of fiat money has decreased. So, economic uncertainties and many other reasons may contribute to the fall in the value of the currency of any country. We are giving here the example of Pakistani rupee just for example. The value of any other country or any other currency of any country may decrease. Political stability. Political instability or uncertainty can erode the confidence in a country, in a currency. In Pakistan, because of political instability, economic instability, and because of huge inflation in the market, the value of Pakistani currency is decreasing day by day. We are giving again to point out, again to mention that we are here giving only the example of Pakistani rupee just for the sake of clarity or example, not otherwise. Stable political conditions generally support the strength of fiat money. If the economic conditions of the country are good, political stability is there, and there is proper business environment in the country, monetary policies of the central bank are good, then the value of the currency of that country remains stable, or the power of the fiat money or the strength of the fiat money increases. Debt levels. If there is excessive government debt, it can make people concerned about the country's ability to pay back its debts. It adversely affects the perceived value of its currency. It means that if the government goes on taking loans for its purposes, then the people of the country as well as in the international market, it does not go well within the eyes of the residents of that country as well as in the international community. So it naturally adversely affects the perceived value of the currency of that country. If a particular country goes on taking loans and loans, naturally the value of that money in the eyes of the public will naturally decrease. Speculation and market sentiment. Traders and investors' perceptions, speculations about a currency can affect its value in the foreign exchange market. So, investors in any country play a good role in any economy. So, what are the thinkings of the traders? What are the thinkings of the investors about a particular currency? Also play its role in affecting the value of the country, affecting the value of the currency of the country. Next is natural disasters and crises. Unforeseen events such as natural disasters or economic crisis can have a significant impact on a country's economy and consequently its currency value. Central banks uses a variety of monetary policy tools to prevent fiat money from losing value. These tools include adjusting interest rates, buying and selling government bonds, and reserve requirements. If the central bank wants that the money supply should be increased in the market, then it can buy government securities from the market. If it wants that the money supply should be decreased in the market, then it can sell government securities in the market. If it wants to increase the money supply, it can decrease the reserve requirement. If it wants to increase the money supply, it can decrease the reserve requirement. So in this way, by decreasing or increasing reserve requirement, by buying and selling of government securities, and changing the interest rates which it charges from the commercial banks for the funds, it can affect the money supply in the market. Now the topic before us is decoding the fiat currency. Is the supply infinite or finite? No, there is no limited supply of fiat money. As already told, fiat money is the currency which is issued by the government and declared to be the legal tender for all the transactions within its jurisdiction. Normally, in most of the countries, central bank of the country is given the authority to print the currency notes. So, as and when required by the government or the central bank, they may print more physical currency or banknotes. Central bank has the authority to control and manage the supply of fiat money. It can decide to print more money or conversely remove money from circulation. But it is not that central bank will go on printing fiat money. No. If they do so, if they print more fiat money, what will happen? More money will come into the circulation. The supply of goods and services will remain the same. More money will chase that quantity of goods and services which are available in the market, and ultimately the value of the goods and services will increase. That is, there will be inflation in the market and the purchasing power of fiat money will fall. Suppose there is $1 billion in the market, and suppose there are 1000 items. Suppose the central banks prints a lot of fiat money, and the fiat money or the money in circulation increases to $1.5 billion. It will again chase 1000 goods. What will happen? The supply of goods is same, but the supply of money has increased. What will happen? The prices of these goods will shoot up. There will be inflation and the purchasing power of the fiat money will decrease. Conversely, the shortage of money might hinder economic activity. If there is shortage of money in the market, money supply is less, the banks will be able to give less loans to the public. So when the people will not be able to get or borrow money from the banks, they will not be able to set up their industries, their shops. So the whole cycle of economic development will decrease. There will be slow economic activities. Economic development in the economy will be slow. The supply of fiat money is influenced by various factors such as economic conditions, monetary policy goals, inflation targets, etc. Central bank has its monetary policy. The central bank aims to manage the money supply in the market or in the economy in such a way that there is price stability in the market and there is sustainable economic growth in the market, economic growth in the economy. Now the question is, can fiat money be replaced by cryptocurrencies? If we talk about the current scenario, most of the governments in the world have not fully embraced cryptocurrencies as a replacement of their national currencies. It means that most of the countries in the world are having their own currencies, such as in USA, there are dollars. In India, rupee. In Pakistan, rupee, and so on. It is possible that cryptocurrencies could eventually replace fiat money. It means that it is possible that, say, after 50 years, 100 years, or in some near future, we cannot predict, we cannot say with certainty anything. It is possible that cryptocurrencies may replace fiat money in future, but we cannot give a deadline when it will happen. While cryptocurrencies such as Bitcoin have gained popularity in recent years, they currently coexist with fiat currencies rather than replacing them entirely. It means that though cryptocurrencies such as Bitcoin are gaining popularity in the world, they are now coexisting with fiat money which has been issued by the government, but these cryptocurrencies have not replaced the physical currency notes or the coins which have been issued by the government. Now we will discuss why the cryptocurrencies are gaining popularity. What are the various benefits of cryptocurrencies over the fiat money, such as security. Cryptocurrencies are secure because they are based on blockchain technology. Blockchain is a distributed ledger that records all the transactions on a cryptocurrency network. This makes it very difficult for anyone to counterfeit or double spend cryptocurrencies. So first point is security. It is very difficult for any person or organization to counterfeit the cryptocurrencies. They are very secure. Next point is efficiency. Cryptocurrencies can be transferred very quickly and cheaply. Very fastly they can be transferred. There is no need of any intermediary such as bank or credit card companies. There is no need. Next point is transparency. In most cryptocurrencies such as Bitcoin, all the transactions on a cryptocurrency network are publicly viewable. This makes cryptocurrencies very transparent and it can help to prevent fraud and corruption. However, there are some challenges that need to be addressed before the cryptocurrencies can replace fiat money. Now we will have some overview of the challenges which are being faced by the cryptocurrencies. First point is volatility. Cryptocurrencies are still very volatile. It means that the prices of the cryptocurrencies can fluctuate wildly. So, if we intend to make any investment in the cryptocurrencies, it is a very risky investment and it can make them difficult to use as a medium of exchange. Next is regulation. In the case of fiat money, it has the backing of the government. It has been declared as legal tender by the government. But in the case of cryptocurrencies, they are still largely unregulated. This has led to some problems such as fraud and money laundering. Next is adoption. Cryptocurrencies are still not widely adopted. Suppose if you go to the market to purchase something, whether you can use Bitcoin with an ordinary shopkeeper for the exchange of certain goods and services? No. Because the cryptocurrencies such as bitcoins are still not widely adopted. This is a major barrier to their widespread use. We as an ordinary individuals are using the fiat money, the banknotes or the coins which have been issued by the government of the country, or we make use of digital form of currency which exists in our bank records. Businesses and consumers need to be more comfortable using cryptocurrencies before they can replace fiat money. At present, the individuals as well as the organizations are not comfortable with the use of cryptocurrencies. When the people will become comfortable with the use of cryptocurrencies, only then these cryptocurrencies can replace the fiat money. As technology continues to advance and cryptocurrencies evolve, it is possible that they could play a larger role in the global economy. That is, with the passage of time, when new and new forms of cryptocurrencies will come, there will be many developments in the field of cryptocurrencies. It is possible that these cryptocurrencies will then play a big role in the global economy, and then they can play a big role as a medium of exchange. That is, then we may use that cryptocurrencies as a medium of exchange. That is, then we will use the cryptocurrencies for purchasing goods and services with other persons. However, it is important to note that adoption and acceptance of cryptocurrencies as a replacement of fiat money would require significant changes in the financial system. It is not that we require only change in the adoption policies of the individuals. There needs to be change in the financial system, needs to be changes in the financial regulations, and widespread acceptance by individuals and institutions. When all these types of conditions will be fulfilled, only then we can think that cryptocurrencies will replace the fiat money. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.